Hello and welcome to BQ Prime. I'm Hiral Dadia. Joining us on the show today is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors, to discuss the movers and shakers of trade today. Ashish, good morning and welcome to the show.
Good morning.
Ashish, let's start with Raymond and Godrej. If you look at both these counters, they have been trading under pressure. And as we know, it's Godrej who will be actually going ahead and buying out the consumer business of Raymond's as well. Taking the size of Raymond's in terms of the revenues that it generates from this business and the deal value of almost 2,800 odd crores, what do you make of this, and what would you advise an investor who's holding both these stocks to, or who wants to enter both these counters?
So we'll talk about Godrej consumer products. Stock has already started correcting on this news. Even yesterday, stock was down. Today, again, stock is underperforming because sheer amount of cash outflow that Godrej consumer product has to shell out. So almost 2,825 crore they need to pay to acquire this division, and they're having cash in hand, or which is there in books is 2,000 crores. So now from a cash surplus company, you need to take debt to fund this acquisition. This is the major concern of the street. Another concern is as the present portfolio of Godrej Consumer Products enjoy a very healthy EBITDA of 20 to 23% on various products. Here they are acquiring a portfolio which is having EBITDA of less than 10%. This is another concern that on blended basis, EBITDA margin will also take a knock once this integration takes place. So it's a negative as far as Godrej Consumer Product shareholders are concerned. And again, you are paying almost 5.4 times of sales, and that to a company with such EBITDA margins. So this is the reason Godrej Consumer Products is underperforming, and it will continue to underperform. Now, if we talk about Raymond's, again, this is positive for them as such because they are going to get this money, and at the same time they'll be net debt free company in this year, and they can invest in their other verticals where they have more profitability, like real estate business and textile also. Only thing is, as the stock has already moved in that news anticipation from 1400 to almost 1700 levels, so now those insider or those investors who have bought this stock expecting this development, they are offloading. But at the same time, I'm expecting if we get this stock at 1500 levels once again, this will be a very good buy because a net debt free company and good real estate in Thane and good textile business, engineering business, etc. This company has will continue to do well. So my buy call will be on Raymond's and sale call will be on Godrej Consumer Products.
Right. So that's with regards to Godrej Consumer as well as Raymond. Now, moving on from the IT majors, you had a Wipro and a Tech Mahindra, both these counters that have reported numbers. Firstly, let's talk about a Wipro. In terms of earnings and the commentary, what do you make of it? And two, the 12,000 crore buyback that has been announced as well. How are you looking at it?
Yeah, now Wipro, as expected, they'll be mostly underperformer, and they have really done that underperformance also. And in future also, they are not expecting any margin expansion or growth. In fact, negative growth is projected because the major projects from their US consumers or customers are particularly going slow. So Wipro will continue to underperform. Only sweetener which they gave is 12,000 crore worth of share buyback, which I think at 445, which is only solace in this market or in for this stock. But this is not something like which will continue to take a stock on upper levels, because ultimately it's all your fundamentals which will decide the future price. Again, a company with a market cap of 2 lakh crores, 12,000 crore kind of buyback is not that huge also in size. And the kind of growth projections are there. I think the stock will again come down when this euphoria related to buyback gets over. So it's a sell on rise, Wipro, in my view.
Right. So sell on rise coming in terms of Wipro. Coming to Mahindra, overall, it's missed estimates. They've recorded a 26% drop in terms of profitability. How are you looking at a Tech Mahindra as well?
Yeah, Tech Mahindra, I think at this price, I'll not advise to short sell a stock or exit from this stock, because now stock is going to find its bottom after this particular set of a weak quarter. And for a long time, we haven't seen such performance from Tech Mahindra. But in my view, there's already factor in the prices, because if we see stock is correcting from 1300
Hmm.
odd levels, now came to 1000 rupees, also in line with how other IT players like Infosys and TCS has also come down. So Tech Mahindra will also find its bottom at 1000 rupees level. In my view, whatever the 5G and telecom related expenditures are there, there's some pause was there in last couple of quarters, but we have seen that after last quarterly
Hmm.
numbers also, the stock has rebounded very smartly, and I'm expecting same kind of movement. Once there is some consolidation and some strengthening of IT stocks like Infosys, TCS, then third major stock which will start performing will be Tech Mahindra only. So
Hmm.
I'm not advising to sell this stock and continue to remain invested. In fact, if you get the stock at 980 odd level, should be added in the portfolio.
Right. So that's with regards to where Tech Mahindra goes, and that seems to be an interesting one. Moving on, you have an HUL as well. Now, the stock has declined, and this is mainly because you have brokerages who've gone ahead and cut the target price on the counter. And they've clearly said that there could be margin pressures and a delay in terms of volume recovery that was anticipated from here on. How are you reading an HUL? And secondly, from HUL, Nestle, as well as Tata Consumers, which have already reported numbers, what's your view? Because FMCG as a sector has been a laggard in the last 1 year.
If we see HUL, we need to see all the three segments per se.
Hmm.
So they are having home care, they are having personal care, they are having food and refreshment. So if you see even this quarterly numbers, home care and personal care have shown double-digit growth, which is quite significant looking at the market scenario. But only the laggard was food and refreshment, where the inflationary pressures and all those things were there. So I think one positive thing which has happened now for HUL, the raw material prices are going down. So like we have seen Tata Chemical cutting prices of caustic soda, etc., 4-5%, and other intermediaries prices are also coming down. So
Hmm.
I will give a benefit of doubt if you ask me for HUL for this performance. In my view, performance is not that bad. They have missed the guideline by 1.5% only, not that significant that they have projected 7 and they have got 2. So in my view, already again, like stock has corrected from 2,750 levels to 2,400 levels already. So such numbers are already factored in. Advertisement expenditure and etc. also at very stagnant level. So I'm not expecting any major OPEX related expenditure will happen in this quarter. And from here on, we'll see improvement only. And this is the reason, again, I'm not advising HUL to sell again. And in my view, at 2,400 levels, gradually we should start adding in the portfolio.
Right. Moving on from the banking space, Ashish, you have Axis Bank, which is down nearly 2.5 to 3% in trade today. And if you see the YTD performance of the counter as well, then 9% is the kind of cuts that we've seen. Now, there are a couple of factors. Yes, the loss has been there, but that's again from the City acquisition. Overall, the performance in terms of the fourth quarter otherwise has been pretty stable. Brokerages, again, have maintained a positive rating. How are you looking at an Axis Bank? Do you think the valuations are compelling at this juncture to enter the stock?
Yes, again, in my view, this is a stock where a lot of expectations were there. So before result, a lot of traders have built up long positions because everybody was expecting that post HDFC, ICICI, Axis will even come out with same set of numbers. But only this Citibank 12,490 crore kind of money what they have given, they have booked in this quarter. That is where loss has come on exceptional basis. But otherwise, overall good set of numbers. PAT growth is one of the highest. If we see 61% year-over-year growth, ROE almost 18.5, ROA 1.8, all good numbers. Another positive thing happened. It's provisioning. New provision is hardly anything, just 300 odd crore, and their portfolio has more or less now shifted from wholesale banking to retail banking, where now 69% is retail and MSME exposure, which is quite positive in longer run. I think this aberration because of city thing and once the integration happens from retail, they are going to get a lot of portfolio of HNI businesses also because of city integration. So I'm not that again bearish as far as Axis Bank is concerned. In my view, all fall should be used to accumulate this stock because nothing wrong with the numbers, and gradually it will move towards 900 rupees. So 850 will be good entry point in Axis.
Right. And very lastly, PI Industries is an interesting one to see. The stock is up around 10%, and this is on the back of its subsidiary actually purchasing holdings in the Indian operations of an American pharmaceutical company. What do you make of this acquisition, and how beneficial is this going to be? How are you seeing the entire deal?
Yes, I'm quite bullish now on PI Industries also, because one thing first let's understand their business. They are into CSM business, that is customized synthesis manufacturing. So this is a business which is doing very well. Number one. Second, they have now moved towards the pharma CSM business also with this acquisition, where even margins are higher. Third is if we see they are having almost 2,900 crore cash lying idle in the books. So this after these acquisitions also 900 crore odd will be spent. So they'll have still plenty of cash in books, but at the same time, good businesses are coming in the portfolio. At the same time, good top line is also going to be there. So I'm still expecting the stock is going cheap because available at 35, 36 times FY24 earnings, which is for a market leader is a cheap valuation in my view. The stock is still 10% away from 52-week high levels, which I'm expecting that in next 1 to 3 months, you will see 3,700 mark for sure in PI Industries. So this stock should be bought and hold for 10 to 15% upside from here.
Right. So 10 to 15% upside with regards to PI Industries is what Ashish is mentioning as well. So a lot of movers and shakers, Ashish, today. Thank you for your views as well. And this is going to be beneficial for the investors. Thank you. Stay safe and have a great weekend as well.